All right, good morning, everyone. Welcome to this week's Regional Report, a GPEC Virtual Series, a very special report we have for you today. A status, an update on Greater Phoenix. We have a terrific panel joining us here today, and we have about 665 people registered for today's webinar. My name is Eric Sperling. I'm the Managing Director here at the Social Television Network. If you're not familiar with STN, we are a local streaming network based in downtown Phoenix. All of our shows and segments are dedicated to local leadership, community growth, and actionable solutions, hence our relationship with GPEC and their CEO, Chris Camacho, who we're going to hear from in just a few moments. And if you're not familiar with GPEC or the Greater Phoenix Economic Council, they are our regional development organization representing 22 cities and towns and Maricopa County. It is their mission to recruit businesses to the market and enhance competitiveness here in the region. And of course, now showing their commitment to the community by launching this virtual series. I want to mention that our next regional report will be on Tuesday. That will be exciting. That'll be a mayor's roundtable. So look for an email to register for that event. But let's get started with today's discussion. And if you're joining us for the first time, we do have some housekeeping notes that we'd like to go over. Today's webinar will last for about an hour. Audience members are muted and without video. This webinar is being recorded and can be shared on the GPEC website and social media. You may submit questions using the Q&A feature at the bottom of your screen. Should you experience any technical difficulties, just try logging out, checking your connection, and logging back in. And then we do invite you to share this information on social media. Please feel free to tag GPEC and use the hashtag Greater Phoenix Together where appropriate. All right, let me introduce the panel. Today we're hearing from Chris Camacho, President and CEO of GPEC, Christine Mackay, Community and Economic Development Director at the City of Phoenix, and Dr. Robert Robbins. He's the President at the University of Arizona. And Chris, we are going to start with you, current CEO and President of GPEC. Under your leadership, you have attracted more than 322 companies, creating 55,000 plus jobs and generating $5.6 billion in capital investment. And we're all looking forward to your report, Chris. So I'll let you take it away.
Great. Well, good morning, and I want to welcome the GPEC community to our call today. I want to thank Dr. Robbins and Christine Mackay for taking time out of their busy schedules as well. I was sharing with Eric before we started today, you know, how different the experience has been over the last 60 days. I remember distinctly sitting out at the Waste Management Phoenix Open, hosting top VCs and top global companies as we're doing pitches on the region, and how different today looks. As we look down at the economy today. So I want to welcome everyone. We're in the midst of a very significant decision-making time for our country and certainly for our state. As you can see on the screen here, we're in the midst of this now entering the second phase of the CARES Act funding. And as many of you know, and I'm sure you know a neighbor, a small business that either was approved through the Paycheck Protection Program, or unfortunately quite a few that were left out of the loan process. And I'm going to give you some data here, Eric, that kind of just focuses on that first phase, and then we'll transition kind of broader implications on the economy as we see it. And again, I'll share that with the sentiment. I feel like I've come out of a data bunker for the last 3 weeks, because we've been diving into these 114,000 roughly small businesses in the state of Arizona. And how do we help them? I mean, at the end of the day, I can tell you, and Christine's one of them, but economic development directors, we have these regular calls along with our mayors, our city councils, our board of supervisors, our partner organizations like the Arizona Commerce Authority, Glenn's shop over at the state chamber, Greater Phoenix Chamber, GPL. We're all working together to really address this kind of big issue that's forthcoming. So just a quick illustration for you on first round of PPP. You can see just under 20,000 loans were awarded to our small, medium-sized enterprises under 500 employees, which is roughly just under $5 billion worth of awards. And so you look at that on the surface and you may say, hey, that looks pretty good. It's a pretty significant number of loans and significant new capital coming to our state. But we are one of the top SMB markets in terms of growth over the last few years. And if you look at how we entered this position, we were one of the fastest growing markets, not only in population, but GDP growth and certainly SMB growth as well. So, you know, fast forward to today, as you see these bottom two stats, we look at everything in a per capita competitive context, and you can see that 17% of our businesses that were eligible were awarded these particular loans. We can do much better this next round. And there's going to be tremendous support for small businesses, and I'll get into this in a second. But in addition, if you look at the amount awarded for per every 100 small businesses, you can also see that we're going to reach a pretty significant liquidity challenge for these small, medium-sized enterprises. And let me walk you quickly through that math. So we've looked at what I would characterize as peer states. So peer states would be both by population comparison, but also SMB size. So other states that have roughly the same number of small, medium-sized businesses, so that 114,000 businesses that I mentioned, we compared ourselves to those particular markets, and the numbers are pretty graphic. So in almost every other case that we've analyzed, and again, these are states like Tennessee, Missouri, Indiana, Wisconsin, that have equivalent SMB size markets, on average, they had yielded almost double the number of loan awards that our Arizona small businesses had yielded. So again, tremendous opportunity for us to improve. What kind of drives me to a concerning conclusion for the short term on our economy, as everyone on this call knows, small businesses are the lifeblood of our state. They represent over 99% of the small business, or of the total business count, but also they represent 1 million employees. So significant number of employees are tied to these small businesses. So without getting too deep in the weeds on this, but I think it's really important for everyone on the phone to understand, when we talk about 17% of our loans being, or of our small businesses being covered, if you extrapolate that out for phase 2, which should start as soon as, it sounds like the president signed the second move today, sounds like the banks are going to be liquid with these resources by Monday at the latest. And many of the banks we talk to will tell you that these dollars are going to go extraordinarily quickly. And as I do the math on what I'm observing, if we double our loan coverage, meaning we go to 30 to 35% of our small, medium-sized businesses being covered, our competitor states with our size of SMB markets are going to be roughly at 60 to 65% coverage. So what that creates is, in my mind, is a liquidity gap, or a liquidity to the underserved market. And we're going to get to this second phase. And I believe how important it's going to be for our small businesses to not only rally behind the support of the communities and the state and all the resources out there, we have to get our small businesses filing for these federal dollars, because once they're gone, they're gone. And this is a massive cash injection at stake. And I believe it absolutely plays into our ability to recover from the COVID-19 impacts. So if I'm gonna move quickly then to kind of a second set of, I think most everyone on the phone here really grasp what's going on with this phase 2 of the CARES Act, and specifically, what you're going to see with dollars being allocated. Again, hospitals, if you talk to the hospital CEOs, they've really taken extraordinary measures to ensure that we don't end up with an under-resourced healthcare infrastructure. And as a byproduct of not having the ability to do a lot of the types of surgeries they typically would do, they're seeing pretty significant hardship. And so you see within this next CARE Act, significant resources being provided to the hospitals. I know Dr. Robbins is going to talk about testing capacity and some great work that the University of Arizona is doing, or in the near term. I guess that's coming out very soon and applicable very quickly here. And I think most importantly is where we focused our time is this Paycheck Protection Program. And you'll see that the $310 billion allocated, there is a specific focus for 60 billion of those dollars going to small banks, with the intent to really prop up, you're going to hear this term over and over again in the next year, the underbanked community. Arizona has a very significant portion of our 114,000 businesses that fall in that category. And our feedback from the banks, which, as you can surmise, the banks naturally in the first phase were given these dollars to provide to the small businesses under 500 employees, and naturally they went to their current customers. Second step was going to their larger customers so that they could affect more jobs. And ultimately what that did is it put pressure then on those that are underbanked, largely with the inability to connect to a new bank and or the inability for them to actually get through the paperwork process negated their ability to access these funds. And so again, if you look at, say that through the second phase that 1/3 of our businesses do get covered by the PPP, that still leaves 2/3 of our businesses under-resourced in a time in which the data reflects the average cash buffer for small businesses in the US is 27 days. And we're at day roughly 30 since bars and restaurants closed. So I'm looking at this from, typically GPEC would be spending its resources externally, recruiting companies in, and I'll close with that today. But in the near term, the health and liquidity of our small business community is going to determine how we come out of this. And that is incredibly, incredibly important. So we're going to continue to work with the CDFIs, the community development finance organizations in our state, really focuses on this underbanked community and those kind of disconnected from traditional lending, because we have more exposure there than most states have. And so we think this is incredibly, incredibly important and timely, because again, the clock is running with the amount of cash these individual companies have on their balance sheet. So let's move on to the next slide, which will show kind of additional color on what are we doing in partnership with a lot of our city organizations, as well as those peer organizations I mentioned as I opened up. I can tell you the governor's staff and the Arizona Commerce Authority, we've talked to Sandra regularly around the clock on all the resources they're building with loan calculators and trying to create a destination where any small business, large, small, minority owned, et cetera, can have the capacity to fulfill the PPP applications. What GPEC's done in recent times, beyond collateral development and websites and so forth, is we created a help desk on our website this week that'll take in any kind of question that any small business around the state may have. We launched it yesterday, and we had a number of calls already coming in, from simple questions like where do I find the forms, to what happens if I'm in the queue with a large bank and I'm not getting serviced or I'm not getting any feedback, what should I do? And so again, we're trying to be a support mechanism for small business. And this live chat function we'll have, as you can see here on the left side, our team is manning the station 100% of the time through through the work hours. And you can see we've got periods of time even through the weekends that people can call in or go through our chat system and get their questions answered. So again, we're trying to be real time to meet the needs of small business, because again, I look at the math. Unequivocally, we must overperform on phase 2. There's no other mechanism that a city, a county, in terms of loan infrastructure can do that can match what the federal government dollars can do for us. So that's why I'm urging, whether you're a commercial developer, you're a real estate agent, you're a university, tell your friends, tell your colleagues to go to gpec.org, ACA's website. The resources are there to help these small businesses file. Let's go ahead and advance. I'm gonna close up with kind of some broader economic impacts, and we'll get to Dr. Robbins and Christine here in a moment. So a lot of questions have come up that center around what's going on in each of the respective sectors in our economy. And I'm going to touch on a few of them and illuminate some stats for you. So as you see on the screen here, the restaurant sector was pretty decimated in the last 4 weeks. You've seen nationally unemployment filings now reach 26 million. In our state, we've had roughly 450,000 unemployment filings, and much of these unemployment numbers are stemming from the restaurant sector, which naturally, when we went to social distancing, we're seeing sales down roughly 80%, and you're seeing job losses. Roughly, the latest number I saw was 83% of 229,000 workers. So that's a pretty stark, precipitous, quick fall off that no question had immediate impacts on our unemployment position. Now, with that said, it was published this last week that with the just enormity of the issue and the number of unemployment filings, our state had $150 million of payout for unemployment claims. And even a month ago, in middle of March, that number was 3 million, just to give you an idea of the payout. So we're seeing massive, massive demand on the unemployment side, largely stemming from accommodation sector, restaurant sector, and tourism affected sectors. And certainly retail obviously has been hit as well. So what I see in the near term, as we look at the economic position, is that doesn't really change those kind of service sector oriented companies until we're able to reopen the economy. And as the governor stated this week, he's taking a very measured approach to and following CDC and the president's guidelines about ensuring we're curtailing the number of COVID cases, which unfortunately we had a major spike again this week and even yesterday. So again, timetable will be to be determined, but again, I don't see the service sector recovery happening until we're able to ease back into society, and that's going to be a lag and a draw on those small businesses as well, like I talked about. So looking at the commercial real estate industry, which again has massive implications on the health of our region as well, and the team was on a CB call this week that referenced the number of kind of paid April 1 rents, and you can see the industrial market is still performing even with the commercial eviction executive order in place. You're still seeing industrial be very strong, and I'll tell you the industrial clientele in our pipeline is still categorically strong. Office, I think it's still early in this game. I think you will see pretty significant implications coming. We had a number of tech companies that had expanded in the last year and a half that have ultimately decided to pause their expansion and/or even curb their current job numbers that they were proposing for 2020. And so I do think you're going to see pretty significant sublease space on the market here in the near term, which again, downside is the landlord's going to be impacted massively by that, and ultimately their lenders impacted. If there is any silver lining on that front, is when we have product and the national economy shows a glimmer of hope, we immediately show a very strong position. So the last piece on that last slide was just simply the retail numbers. So again, 4 out of 10 paid their rent on time. So again, that's another facet of what we're tracking very closely. I do think retail will forever be reshaped from this downturn, but the other that's going to be reshaped, tying back to that industrial model, is global supply chains. And we had a recent roundtable discussion with some of our key companies, Honeywell, Rogers Corp, Carlisle, and others. And I talked to Insight this week, and I do believe that the reshaping of global supply chains for redundancy and risk portfolio reasons, and maybe even we're going to see some insourcing to a significant degree. I do believe there will be a swing back to the US over the next 24 months of some sensitive product manufacturing and those that need redundant supply chains where we can't have a massive disruption, because COVID caused a massive disruption in supply chain. So we could be very, very well situated as we come out of this. But again, a lot of my peers I've talked to, they're asking me kind of what's the crystal ball look like. The data lag is so significant, it's really difficult to project how long this is going to last. But I would tell you, seeing what I'm seeing on the unemployment side, the capital drag we're going to see with the SMBs, a little bit of softening in our pipeline, I do believe this just takes us through 2020, a modest recovery in 21. We fully erased, unfortunately, all the jobs gains since the recession occurred, the last recession. So those job gains, have returned back to its original form. So again, the good news about this market is it's extraordinarily resilient, but we haven't had a small business almost chain reaction like I think we're going to see in the next 60 days. So hence why I'm so focused on the PPP process. So again, you look at the claims here in unemployment. I talked about these stats earlier, but I mean, it just kind of punches you right in the nose when you look at just the gravity of the immediacy of the claims increase. If you look at back in the last recession in 8, 9, and 10, there was a gradual buildup as a financial collapse occurred. This was just like an immediate shock to the system. It's like a massive heart attack. And Bobby, this is probably right down your alley, right? You can shed some more light on being with your background. But how do we kind of recharge this economy? I think we're going to have to be consistent. We're going to have to be thoughtful on the health side and ensure that Greater Phoenix and the state of Arizona, when the time is right, we go out and showcase how well we are positioned for this recovery. And there's a lot of positive things to talk about. So this last slide just paints a picture around just again, almost a 6-week period. I asked the team internally to go assess our client portfolio back March 6th, and we did a 3-day audit on our pipeline. And you can see the kind of dark gray illustrates the kind of psychology of business. Was business as usual March 6th. This was kind of the pre-COVID, pre-social distancing becoming mainstream. And I was pretty surprised, as I shared with Andy Warren, our chairman, that there was still so much optimism when we were seeing the data kind of under the covers. And fast forward to just this week, and you see that obviously that's dramatically changed. It's been really cut in half, the project pipeline, where business as usual, which is still pretty, I think, pretty strong numbers, almost 50% of those being still on track for 2020, and the other half roughly taking a pause as they evaluate kind of their risk strategy going forward. So again, the good news is our pipeline was extraordinarily active across all of these asset classes. And as we come out of this, again, I do think industrial could actually hold on and do pretty well. I do think we have some exposure in the office segment and certainly in retail. But we're going to be out. One thing I didn't talk about, and I'll close this up here so we can hear from Dr. Robbins and Christine, is the sheer kind of momentous view of Greater Phoenix, this optimism about Greater Phoenix and how we can come out of that, how resilient this market is. When we see a glimmer of light that this is starting to correct nationally, typically our market is viewed very favorable. And again, it's scalable, obviously quality workforce, modern infrastructure, great quality of life, all those attributes will come back. And even I've heard this from a handful of our clients, is that the way that states are handling this crisis also will play into how companies view respective markets going forward. And so again, I think we've been very thoughtful as to how we've entered this crisis. Mayors have expressed extraordinary leadership. University presidents are going to have to make tough decisions as we go forward. And I'm sure Dr. Robbins will talk a little bit about that. But again, I'm still optimistic, and we're going to be hard charging. That's my personality. We're going to be hard charging on this recovery and working together. And I'd be happy. I know there's going to be some questions coming up, but I do think that we're in a position to, when the time's right, and I think we're about a month away, where we can, get back to selling this region aggressively to these companies, because we have had our biz dev team doing a corporate 1000 engagement campaign where we're talking to the Fortune 500s, and there's actually a Fortune 1000 of them, and the tech community and the VCs outside this market to get their view of Phoenix. And that's why I'm really optimistic about the near term. So sorry for this long-winded, but I think also very critical overview. I'm now on the PPP bandwagon, so you're going to hear me talking about that, and probably for another 72 hours until those monies are exhausted. And then we're going to have to shift gears and go in the next phase to see how we continue to help these underbanked businesses.
No, Chris, thank you so much. What a great presentation. And we do have some questions specific to the PPP program that we'll get to a little bit later on when we open up for Q&A. But we do want to transition over to Dr. Bobby Robbins, the 22nd president of the University of Arizona. I'll let you get right into it because Chris was just bringing up the impact on the economy. And I'll let you take the floor here as we talk about the impact on healthcare. Dr. Robbins?
Well, thank you very much, Eric and Chris, for inviting me to participate. I'm going to keep my comments short. I find that I can talk for the rest of the hour, but what I really want to do is hear from the audience and what questions we can answer. The most common question I get is, are we going to play football in the fall? And I happened to answer that, and I knew something was up when we went on break, and the host had all of his media buddies come on, and then my remarks about, well, I'm not really sure we're going to be playing football this fall, kind of made it onto the homepage of ESPN on draft day. So not exactly where I wanted to be, but as long as they're spelling the University of Arizona right. I remember when I first got here, and the Ohio State was trying to recruit Sean Miller, and I think it was in the first month, and I made some comment, and I said something like, yeah, the old saying, like, over my dead body. And of course, that's the only thing that carried the day, was me saying over my dead body. And my son called and said, use your words carefully. they're powerful. So the University of Arizona, I would say I couldn't be more proud of our faculty, our students, our staff, of how they literally on March 11th, when we were playing a first round game in Las Vegas in the Pac-12 tournament, and I was on the phone most of the time, and we just decided we were on spring break, and we decided to go all digital, remote learning for the rest of the term, which we are almost finished with. I mean, we are trying to grind our way to the end of this term. We would have been having a spectacular commencement ceremony on May 15th, which we're not going to be able to have in Arizona Stadium. But we are going to finish out this term, and people are going to graduate. They're going to get their course credits and finish their courses. But it could not have been done without extraordinary efforts on everybody's part to make this happen. But on March 11th, we made that decision. We also made the decision to ask people not to come back to campus. We generally have, as you have about 45,000 students, and our in residence housing on campus is about 8,000 to 9,000. Only have 500 to 600 right now, and so we think that helped a lot in terms of mitigating the spread of the virus on campus. Plus, we basically send everyone home. We have some very essential personnel who still come into campus. The people who run the facilities maintenance, of course, our hospital workers, the frontline first responders are still coming in, but most everybody else is at home. So we made that decision early. We also made the decision that we needed to be self-reliant on manufacturing our own swabs and test kits, because we knew we were going to be at the end of the supply chain. We're out in the middle of nowhere. We're just a university, but we've got 60,000 people in our family, 45,000 students, 15,000 faculty and staff. And I knew early on that testing was going to be really important. And if we didn't have the test kits, we couldn't do the test. Moreover, I knew it was going to be important to get a serological test to be able to determine whether someone was either actively infected now or had the infection with COVID-19 before by looking at antibodies. IgM antibodies go up very quickly, and then after about 7 to 10 days, you get IgG antibodies. And Governor Cuomo released the results of, I think it was 3,000 randomly selected people across the state of New York. In the greater New York area, or in the state writ large, the number of people who had made antibodies was 14%. In New York City, it was 20%. So 1 out of every 5 people were basically asymptomatic and had the virus and were making antibodies. Now, in really big, bold print, we can't guarantee if you're making antibodies, you have immunity. But, I would be very, very confident that that's the case. So that's why we're doing this antibody testing, and we're going to do it for all of our students, all of our faculty, all of our staff. Plus, the governor found out that we were doing this, and we developed this test in one of our basic labs, which I think signifies an incredible return on investment of investing in fundamental discovery, so that you can then translate those fundamental discoveries into products that can help make the world a better place. And in this case, provide an antibody test that will be very, very accurate and will provide data about which people have the infection and which people have antibodies to the infection. So we're rolling that out in partnership with the governor to test all frontline healthcare providers in the state of Arizona and all first responders. So in this initial phase, we're testing about 350,000 people with our family at the U of A and healthcare workers and first responders. My goal would be to test everyone in the state of Arizona. That's an aspirational goal, but I think we can scale to that. I think in combination with ASU, TGen, NAU, the commercial labs across the state, our clinical partner Banner, Sonora Quest Labs is rolling out mass testing for antibodies in their labs. We feel that everybody should be tested across the state. And I think you need to be careful. This is a real blood draw. It's an ELISA test that is very, very accurate. It has high sensitivity and high specificity, which means a very low rate of false positives and a very low rate of false negatives. The FDA commissioner the other day said there have only been 4 devices, these point of care testing devices, that have been approved by the FDA. But there's 140 of these machines out there that are claiming they can test antibodies. And we're seeing a lot of false negatives. And people are paying $150 or $200 to go get this finger prick and get told that they don't have antibodies, when in fact they may. So that's an important step for us going forward, because the ultimate game here is going to be, we've committed to return to activities on the campus in the fall. That means we got to have processes in place. In addition to testing, we're going to have guidelines and requirements for people to wear masks, to continue social distancing, strict hand washing and hygiene measures. We're probably going to be measuring temperatures. We will, without doubt, have a hybrid approach to this. There was just an article yesterday in the publication Inside Higher Ed that talked about 15 different scenarios for returning people to classes in the fall. The most radical of which would be continue doing what we're doing right now, which is teaching and learning remotely in a digital format. I think you're going to see more of that in higher education as time goes on. But for right now, we're focused on getting our students back to campus and being able to have mitigation factors in place and plans in place that would safely allow them to come back to campus. But it'll be different until we have a vaccine. And that's the final thing I would say. The vaccine story, if you look at the history of vaccines, 3 years. 3 years is the fastest we've ever developed a vaccine and gotten it to market. We're thinking, if you listen to Bill Gates talk about vaccine development, he's really dedicated so much of his intellectual curiosity and his money, his own money out of his foundation and out of his own funds to focus on infectious diseases and developing vaccines. The hope is we would have a vaccine as soon as possible. There's several. I think last count there were 10 or 12, many of whom are now entering phase 3 clinical trials to make sure not only phase 1 would mean they're safe, but getting to phase 3 that they're efficacious in providing protection to people. I think we're not going to have a vaccine for at least a year. And we're not going to be able to be totally safe until there is a vaccine. So we've got to be really, really good at testing, contact tracing, and mitigation factors. I think, Eric, I'll stop there because I want Christine to have time. And plus, I really want to hear questions and answer specific questions.
Yeah, and Dr. Robbins, we do have some questions coming in that I'll hit you with right now. You spent so much time talking about the importance of the antibody testing, and it was very encouraging to hear, your goal to get everyone in Arizona tested. What hurdles do you see that would prevent you from accomplishing that?
Well, the biggest hurdle would be money. So the governor has taken and invested money because he thought it was really important to test the frontline healthcare workers and our first responders, because they put their lives at risk every day without adequate protection. And just imagine, even though, and I just get beaten up about this, particularly from attorneys and people, even people who are scientists who say, you can't be out there saying there's immunity and protection. Well, I'm not saying there is, but I'm saying that if basic biology follows, we know this is a novel virus, but it is a coronavirus. So is MERS and SARS. And if you look back at that data and the way that biology works, fundamentally, MERS, people made antibodies and have had a degree of protection for up to a year, and SARS for up to 3 years. That's why I can't absolutely say it, but because look, there are people in New York City who've tested positive coronavirus, clearly had it, quarantined for 2 weeks, their symptoms went away, and they went back to the operating room and the emergency room and the ICU. I bet you if you tested those people, they had antibodies, and they assumed if I've had the disease, then I'm going to have immunity and I'm not going to get reinfected. There are some reports coming out of China that there have been some reinfections, but the question is, how accurate was the first test? And so, like I said, I could talk the whole hour on this point, but we do believe that that testing is going to be really important, and contact tracing is going to be really important. And I'm really intrigued by the Google and the Apple apps that are coming out. And people in the U.S., in my experience or my opinion, I would say, they don't like to have their civil liberties and their privacy taken away, but they're pretty gracious in giving away privacy issues if they think it's going to help them and help the general population in most cases.
All right, Dr. Robbins, thank you for all that information. Again, we'll probably have some more time for Q&A in just a few moments, but I do want to bring in Christine Mackay. Prior to her role with the City of Phoenix, Christine was the City of Chandler. She was there for 16 years. She's assisted over 150 companies in locating and expanding, bringing 22,000 jobs and generating more than $6 billion in capital investment. And Christine, we heard from Chris talking about the state of our economy, and I know you want to focus specifically on sort of the future of small businesses, where we are now, and then again the impact that this is having on the small business community. So Christine, I'll turn it over to you.
Eric, Chris, thanks for having me here today. Absolutely, that's exactly what I want to talk about, is our small businesses. You know, just by way of background, I've been in this market more decades than I care to admit. So when people talk to me about what's going on right now, they want certainty. This is all foreign to them, and they want to be able to compare it to something. They want to know, is this like the Resolution Trust Corporation days? They want to know, is this like the .com bust or 9/11 or a big recession? And unfortunately, I have to say to them, there's no playbook for this one. This isn't one we've seen before, where it hits so quickly and so deeply and so broadly. I know it's not giving people comfort, but we're working diligently through all of this, as Chris said, trying to come up with solutions to help as many of our businesses, particularly our small businesses, through this. And they're facing challenges. They're facing challenges that they've not seen before. Some sectors are doing very well. They've either pivoted from their traditional role. We have biosciences companies who've pivoted from elective surgery, material manufacturing, into making ventilator parts and and parts for masks and other things. You know, fabric companies that have switched to making personal protective equipment, but quite a number of them that can't pivot. They don't have a mechanism by which to pivot, and they're struggling. As Chris said, 99% of our businesses are small businesses, and they're really, really challenged right now. About 5 weeks ago, I stood up my team, took everybody away from the roles that they were doing, our fiscal team, our administrative assistants, our economic developers, our workforce team away from their traditional roles and had them start calling companies. And we've now reached about 35% of all 18,000 businesses that are here in Phoenix, and asking them exactly what they need and what we can do to help. And the number one thing that we hear from them is access to capital. They had about 3 or 4 weeks of runway to be able to get through this thing, and they're approaching the end of that now. And they don't know where to turn. In the beginning of the calls 5 weeks ago, most of the companies were kind of positive. We're going to get through this thing. It's going to be okay. And our calls that we're making this week is very few of those calls aren't having voices of desperation and, and tears and fear of how long and how deep this thing's going to last. So many of the small businesses that are here in Arizona support a supply chain. They're part of a hospitality supply chain. They're part of an event venue or, part of another business, a restaurant business supply chain. And those businesses, it's the trickle down effect. As our restaurants have shut down and our event venues have shut down and our other small businesses, and we've had layoff of workers. So they're not doing things with other small businesses. It's just getting deeper and wider as we move through. So, just from the calls we've made and the data that we have, I would estimate that somewhere between 20 and 25% of the region's small businesses won't be standing when this thing is over. It's going to be deep and it's going to be brutal. And we're working to help those businesses any way that we can kind of see the light at the end of the tunnel or hang on, just a little bit longer. Restaurants, as Chris was talking about, have been hit particularly hard. This was their market when they were seeing, where they kind of made most of their money to get through the rest of the year. So, January, February, March, April, we have tons of events and tons of things going on, and they shuttered. And while a great number of them have pivoted to doing takeout, that is providing about 30% of the revenue that they would typically see than they see to now. And some have stood up as grocery stores and other things. We have a restaurant here in Phoenix called The Deuce who've repositioned themselves into bringing their workforce back. And they're making meals in partnership with Waste Not and providing meals for families that otherwise wouldn't have food. And so they brought their workforce back and they're out raising funds and providing about 1,000 meals a day. But all of our businesses, we're a close-knit group. We're a collaborative and connected kind of pioneering spirit, small business. And what impresses me the most is everyone's trying to figure out ways to help each other. Nobody's saying, I'm kind of locking it down and I'm only working on my own end. They're working across lines and across sectors, trying to work together to figure out ways to move forward together. Access to capital is the number one thing that we're seeing as their challenge, but also on their export markets. We have a lot of businesses that are here that would typically, small businesses that would export to other markets. Of our entire export chain, about 90% of our exports from Arizona happen from our small businesses. And those markets that they would typically export to are also challenged. So being a global economic shutdown, even those markets, even our exports are really challenged as we move forward. And those small businesses, as we talk to them, the thing that they're most concerned about is their workforce, that workforce that's been furloughed. As Chris's slide showed, all of that workforce that is now either on unemployment or on the furlough market, and getting those employees either back to work as quickly as we can or reskilled in the markets that aren't going to be quite as desperately affected. So, normally I'm the chief cheerleader for the city of Phoenix. 10 weeks ago, all I was talking about was how incredible the market was and what we were expecting. We were on track to be the strongest jobs generator of any fiscal year that we'd been in Phoenix's history. And we're moving forward. I, having been here for so long, thought I had one good hockey stick recession left in me before I let someone else take over and bring new and innovative ideas in. But we're here for the long haul. We are here to help every one of those businesses any way that we can get through this. And if they don't get through, help them redeploy their workforce and help them move to a different level. And, as we talk to the businesses, I think their greatest fear is not knowing what's coming next and how much deeper it's going to be. And and what we're going to achieve and how we're going to, get the market back open again. And that worry is really what's happening. As we talk to these companies, sometimes my team is just a therapist and listening to somebody who's owned their business for 40 or 50 years and doesn't know how they're going to make payroll, next Friday, or wants to know how they can help another company get through this. We had one most recently. He's had to downscale from 25 companies, 25 franchises he has, down to just 8. But we had another company that was looking for a refrigerated truck to be able to turn into a virtual farmer's market for a lot of the, the food fairs and small agri-tech that goes on here in the metro area. And graciously, he donated his refrigerated truck, and they've stood it up and are helping about 20 other businesses move along there. Chris talks about his numbers at the beginning, and normally we would be ecstatic that we'd received 19,000 small business loans and $4.8 billion into our market in less than a week's time. But I've not ever been so sad of receiving 19,000 loans into our market at one time. And as Chris was talking about earlier, we got to do better this time. And GPEC has stood up with their chat line and their customer care center. We stood ours up. We get calls on a daily basis. We're helping companies through, get their share of the money. I think how we receive this share of EIDL and PPP is really going to be indicative of how we come out of the market. We've got to make sure that more of our small businesses have access to that capital and that they can make it through on that runway. It is absolutely how these small businesses come out of this challenge is going to set the tone for Arizona's next decade and how we continue to grow. So, we see really positive things out of some of our small businesses that are working diligently and moving along. Our industrial businesses have barely seen a hiccup. Even in the supply chain, they've barely seen a hiccup. They're still moving strong and continuing forward. But those more service-related industries, it's going to take us quite some time to get them back. And I'll kind of finish it up with, even if this was over and we have a vaccine tomorrow and it's business as usual, those service sector related industries are coming into summer, into their slowest industry. So the soonest on those service sectors that we would even begin to see some type of a recovery with them is going to be here in the fall. So, excited to be part of the solution, happy to help on any way that we can to ensure that the region comes out better and stronger from this thing than we went into it.
Christine, I do have a follow-up question for you, and I'm going to bring back some of the stats. And Chris, you can weigh on this as well. From Chris's presentation, 115,000 roughly local businesses here in Arizona, the 20,000 approved loans, we're talking about 17%. And I was encouraged to hear that, Christine, you're actually, you're calling all these businesses, trying to figure things out, taking a proactive approach. Is it just that they're not filing for the loans, or is it the loans aren't being funded? What are you hearing most? Is it the businesses that aren't taking the steps to get it done, or are there more businesses just, as Chris mentioned, in the queue, not knowing if those funds are coming?
I think it's a couple of different things, and then I'll let Chris chime in on it as well. If you look at Arizona, we have 65, 70 banks here in Arizona, where the Midwest will have anywhere from 130 to 140. And the banks that are here, we've had a lot of focus on real estate. We've had a lot of focus on investments, and probably not as much focus on small business as some of the more seniored markets. You have to remember, we are the youngest of all the big cities, and we follow kind of behind others. I think a lot of it was, the application was a bit complicated. When you looked at the original economic disaster loan application, it was so complicated, we had to create a video that walked them through line by line, because that application had been set up for a hurricane or a tornado, things that the Midwest is used to, not so much in Arizona. And so it took some time to get our small businesses educated on what those fields needed and how they would move forward. Some of our bigger banks had a little bit of a pause on getting the program launched kind of on that Saturday, Sunday, Monday while we went forward. And our businesses had a lot of questions. Our applications were incomplete, and I think we really want to help them get those applications in a more thorough manner. And I really do think that had a lot to do with it, is just kind of the disconnect between our large banks, our small banks, and our small businesses. Chris?
Yeah, the only thing I would add to Chris's overview, because I think that's absolutely correct. I don't think it was one thing. I think it was a combination of items that led us to this position. But the overwhelming demand initially for the big banks, because the primary recommendation as the provisions came out from Treasury, or the rules came out from Treasury, even we were telling every SMB, call your primary lender first. Well, if the larger banks are your primary lender and there's overwhelming demand, you're likely going to be in a queue at some point. And so what we were seeing are the community banks were stepping in and supplementing the larger banks as the need warranted. And so we're going to continue to see that, I think, in the second round. The other thing too, I mean, this was dropped on the banks that Friday. I think it was a Friday afternoon. Some of our larger banks hit their internal cap by, like, I think Chris said Saturday or Sunday. So there was a pause that occurred. And, all the bankers that I talked to, a lot of them are friends that obviously, help our small businesses and large businesses. Just to overwhelming demand, the commercial bankers I talked to, for like 5 days straight, they were working sun up to sun down to process loans. But as Chris said, I mean, the number of 7A certifieds in our state versus other states, we don't have as many. So again, you just think about the flooding and then the bottleneck that occurred. What I will share is, coming into the second round, I am hearing from the commercial lenders that there's already a massive queue that's ready to go, but I'm sure that's happening in every state. And so again, we just want to encourage, I don't want PPP fatigue, because I'm already hearing that's going to be out in the community, but I think we have 72 hours to execute on that. And then once that's over, we're going to be diving in to understand if we did hit a third of our businesses supported by PPP, and that leaves 2/3 that are not, what's the next intervention? Because this doesn't go away after next Tuesday. And there's going to be immediate need to focus on how we help more of these businesses through this process. So I think it's a combination of things. But again, I do see our community really coming together, as Chris talked about, businesses helping businesses and even banks helping banks. And I am hopeful we'll come out with a better position on the second round.
Yeah, thanks, Chris. And I do want to mention, as I look at the time, we are close to 10 o'clock here. We have a very large audience right now, very engaged audience that are sending a lot of questions our way. So Christine, Chris, Dr. Robbins, if you don't mind, understand if you have to jump off, but we do have a lot of questions coming in and we'd like to get to some of those. So we may go past 10 o'clock here. Just want to let everybody know who's watching as well. And Dr. Robbins, we do have a question coming in for you. What do you anticipate will be the greatest impact to universities as a result of our current COVID-19 epidemic?
I think you're on mute, Bobby.
There we go.
That was my first unforced error of the day. There will be many. I think the clearest one is going to be obviously financial, because we live off of tuition revenue. We depend on students coming and paying for the education that they get. And because we don't get as much state support for higher education, I think we're 48th in the country in terms of state support for education, which, we got a big cut during the last Great Recession, and we've never had that funding restored. President Crow has been on this now for for a good decade, telling this story, and I think he's absolutely right. We're in a vulnerable situation because we were forced to go try to recruit students from outside the state of Arizona, and because we're not able to get our international students back to classes, that's about 15% of our top line revenue. But it accounts for more than 50%, the out of state, meaning international and out of the state of Arizona, for our net tuition revenue, clearly over 50% from that 40% of our students. So that's going to be very tough for us. We're seeing that people are going to want to stay closer to home. My hope is that Tucson is close enough to LA and San Diego and even the Bay Area that close enough to home means in driving distance. But we're projecting that 80% of our international first-year students aren't going to be able to make it here, maybe 100%, because the embassies aren't open to get visas for them to even get into the country. And we're projecting about 25% of our out-of-state students just won't come back. There's a potential that people will take a quote gap year until there is a vaccine, that they'll go to all online, or there'll be a hybrid approach. So clearly for us though, the biggest issue is a drop in revenue. While we're trying to keep our research enterprise going, it's very difficult because a lot of the work that's done, frontline work that's done in our research labs, are done by our students, particularly our graduate and PhD students. But that's one of the great things about the U of A, is that we really give undergraduates an opportunity to get right in and do research. The downside is that if they don't come back, a lot of our research labs who luckily have funding from the federal government in most cases, and that's going to continue. But you know, that we've got to keep that research enterprise going. So those are the biggest issues we're facing. And of course, the number one thing that we're facing is the safety for our faculty, our staff, our students, many of whom are in higher risk categories. They're either undergoing chemotherapy, or they're older. As we get older, our immune system is not as robust, or older and have comorbidities, cardiovascular disease, diabetes, which makes them a higher risk for getting this infection and not doing as well as a healthy 21, 25-year-old who has a robust immune system.
Dr. Robbins, thank you for that. I have a question for Christine. You know, you were talking about some of those conversations that you've been having with small business owners. We're all familiar with terms like runway and cash flow. And in your experience, you know, these are these are some difficult conversations to have with business owners. So what have you been telling them? Is there a common theme? You mentioned that some of them may have 15 days of runway left versus 30 days of runway left. How are you handling some of the more difficult conversations where a small business owner looks at their numbers and says, I have 10 days left?
I cry a lot in my car on the way home every day. It's hard. It is the hardest we have. We've had other resources. So we've been really fortunate. The City of Phoenix and the Phoenix IDA stood up a $2 million grant. Some of these businesses are really small. They have 4 or 5 employees, or a couple of employees, and we stood up a grant program for up to $10,000 for each of those companies, and have had a success there. We also were able to work with with PCDIC, our new market tax credit organization, and we stood up a $25,000 small business loan. So we've had other things that we've been able to redirect them to, and resources, and be able to help. I'll give you one example. We had a woman with a small events venue up in North Phoenix, and she was one of the really, just crying. She put everything into this events venue, and she was going to lose everything. We happened to know there was a construction company getting ready to break ground on a project up the street. We made a connection between the two, and they rented her parking lot as a laydown area, which is covering her mortgage through this rough time. So, we've just been as creative as we possibly can be. When we don't think there's a solution, we jump on a call with our team and we brainstorm till we figure out the solution. But Eric, quite frankly, sometimes we just have to listen, and we just have to let them reveal that stress that way. And we keep thinking of ways that we can help them and get back to them on any solutions we can have.
And similar question for Chris, I'll bring you into this. Whether it is grants, whether it is a foundation stepping up, again, the loan, what are you telling the businesses who are at that time period where they look and they go, I've got maybe a week to 2 weeks left? And I know it can be confusing sometimes to navigate where those funds might come from when they're so desperate for them.
Yeah, Eric, what I've found, and again, talking with a lot of our banker colleagues, is I've never seen such flexibility from the local banks to help, whether it's defer payments or, elongate the process for repayment. So I think we're in a new normal or new period where banks are being extraordinarily helpful right now, specifically to restructure debt. against their expenses. And I think the other is, as Chris talked about, a number of our cities have put together, albeit marketing programs, grant programs, loan programs. If I would say first recommendation is, reach out to your city, talk to your city about, support that they may be able to provide with infrastructure they have. And then second, going back to the next round of PPP, on our website, if you go to gpec.org, you will see a tremendous amount of resources, but specifically, I did some media yesterday on the direct feedback we had from banks. We itemized the 5 specific failure points that we found with the first round of PPP, excuse me. And so that's up on our website, very specific recommendations. So again, I think it's going to be a tough time, but as Chris alluded to, it warms my heart every time I think about these unique, creative ways that cities and businesses are helping one another. That's what we have to do in trying times, and no kind of magic amount of money is going to fix it all, right? But again, the way that our community is so resilient, how we work together, just gives me optimism and hope about our future. And so that's really what we're going to keep doing, is working as hard as we can to help support these businesses.
And then I'll bring everybody in for this question. We've discussed this on previous regional reports, but just talk about what the economy is going to look like moving forward. Some have described it as the U-shaped economy. Some have described it as the V-shaped. Last week we talked about potentially a Nike swoosh. Chris, Christine, Dr. Robbins, I'll start with you, Chris, because I know we've talked about this before. What do you anticipate the economy looking like?
Yeah, I mean, I was trying to find new letters in the alphabet to describe this, U, V, what have you, W even. You look at a lot of the national economists are saying, this is like an I-shaped recession, straight up and down, as Chris alluded to earlier, just a period of time in which you had massive unemployment claims. And there's even projections that unemployment could climb roughly to 15 to 18% in 2020, which is hard to wrap your head around. As I said, as we opened up, that I remember standing outside at the Phoenix Open, and again, how great that experience was, and all of a sudden it changed. So I think it's too early to tell. I'm guessing it's going to be like an elongated U, where you have pretty severe, dramatic impact, probably a leveling off, where as we restart or reopen the economy, I think that's going to be a longer time period, unfortunately, than most people think, because I think we'll have some stops and starts. I'm hoping we won't see a resurgence of COVID and mortality rate increases, and obviously IC bed unit healthcare draws. But I do think it's going to be a slow and steady. I'm hoping, that we're hitting close to that bottom point. But again, what I'm really still concerned about, the vulnerability of at-risk businesses. If you think about the worker in the United States, the worker is covered through really July 31st. So if you're laid off or unemployed, your federal unemployment coverage is really double what it traditionally is, and you had your stimulus check. So that's a worst case scenario, but better for these workers. You're having some support, financial support. But as we get to the end of July, when those wear off, and if we have a liquidity crisis from small business, that I think could just prolong the recovery. And so you add all that together, that's why I think it's more like an elongated U.
Dr. Robbins, how do you feel about that? And talking with you about the antibody testing, how critical you feel that is to reopening the economy, and maybe the timetable there on, again, trying to your goal of getting everybody in Arizona tested, and how that will impact the economy as well.
Yeah, I think, Eric, that Chris had it about the way that I see it. I love that elongated U reference. I do think once we start, certainly once we get a vaccine and there's a lot of confidence in protection, there's a lot of pent-up demand for getting back and into the quote normal. I don't know that we'll ever return to normal in my lifetime. You're all a lot younger, so you got more time to see it get back to a new normal that is more like what it was pre-COVID. But I think that there will be a slow engagement, and we're betting on it because we're a business, and if our customers can't come back and we can't safely take care of them, then our losses are going to be much worse. So that's why we're working so hard to be able to provide a very safe, protective environment as much as we can. There will be a resurgence without question in the fall. COVID is not going away until there's a vaccine that can protect us against this novel virus. So we will see a recurrence. The question is, have we learned from this first wave so that we can mitigate, protect, and I think contact tracing, testing, those are going to be our best two, and isolation, and honest communication of where we are and what to expect and what we need to do. I think those three things, if you look at, Germany is opening back up. They're doing almost 1 million tests a week. And I think they're thinking they even need to be doing more. So it's going to be a combination of all these factors, but we'll get there. This next year is going to be rough. My hope is, and I'll come back finally to this thing about, when can we have our football back and basketball and go to the movie and go to plays and, go to the mall. I think it's going to be slow, incremental return to that. Could we get sports venues where there would be every third seat, you would have to have your temperature checked? Are we going to go to credentials that I have antibodies, therefore I'm protected and I can't infect anybody? I mean, these are all questions over the next coming weeks to months. I hope we can have a informed and vigorous debate on that will help us get back to getting things, not necessarily back to normal, but what the semi-new normal will be until we have a vaccine.
Yeah, thanks, Dr. Robbins. And as we close out here, I'm going to give everyone on the panel an opportunity just for some final closing remarks. And Christine, I'll start with you here and open up the floor just on our path to recovery and kind of wrapping up everything we've talked about here today.
I think that location is always the top, term in real estate and where you see market recovery. And I think location will never be more important in a recovery than it will here. And those locations that have a substantial amount of testing will be those markets that recover the most quickly, because it'll put confidence back into the market. It'll put surety back into people that are buying and that are going out. And so I also think that, while this is a horrific time, we're seeing new segments and new industries and new, people pivoting and creating new companies and new things. And this is brutal, but we'll come out of this stronger than we went in, and we'll come out together. But those markets that are going to recover the fastest are those that have a substantial amount of testing.
Thanks. And Chris, we'll send it over to you now for some final remarks.
I agree on the testing. I think that's absolutely critical. One other side, though, what we haven't talked about today that I'll close with is the enterprise companies that are out there, these larger than 500 employees or even multinationals. While they've been hit in the stock market valuation, the conversations I've had with key executive teams reinforce their supply chains are strong. They're kind of even propping up some of the machine shops and others that are within their supply chain to help advance product delivery to customers. And so we talk a lot about not getting to the economics debate right now as we're closing, but just the tradable versus non-tradable sectors. When we create, when we have these kind of companies we recruit to Arizona that produce a widget, whether that widget's a transistor or a tile, and that gets set somewhere else that creates wealth for our state. Those are the companies actually that are propping up this market right now, these tradable sector companies. So I don't want to lose sight of how important it is for us to recruit and help those kind of companies expand. We're just seeing the vulnerabilities of small business today, which is the near-term crisis. But longer term, we need both of those segments to be really strong. And so I see the resilience of this community coming together, and that's why I'm so optimistic about our future, as Dr. Robbins talked about, is we will get back on track. It might take more time than we all want, but it'll happen, and we're going to keep working towards that.
All right, Dr. Robbins, I'll give you an opportunity, as Chris just mentioned, talking about getting back on track.
Yeah, I am very optimistic about the future. We're going to get through this. I mean, put it into context. In 1918, the 1917, 1918, in that era when there was a massive global pandemic, it's estimated that 25%, some say 10 to 25%, because the numbers aren't necessarily as accurate as we could get today. Population of the world was lost. We're nowhere near that. I think if you start looking at the data specifically that's coming out of New York, and we've always thought that about 10 to 20% of asymptomatic people have had the infection. The death rate from this, if you extrapolate the data that Governor Cuomo was talking about, the death rate is less than 1%. For the flu, it's about 0.2 to 0.4%, the seasonal flu. So, less people are going to die today because we've advanced over the last 100 years. We've got better medicine, we've got better care, we've got more recognition, and we can, 1917, 1918, penicillin hadn't even been invented. So I'm confident we're going to get through this. A vaccine will be produced, I think, in record time for a vaccine coming to market. But remember, you got to manufacture it, you've got to distribute it, and then you've got to administer it. So that's going to take some time. And so we need to really get our act together so that we can get that done. And only the federal government, in my opinion, can do that. But I think it's going to be a great time for innovation, for entrepreneurship, and what better place than Arizona to do that. I think we were on such a roll before mid-March, and I think we'll get back to that position because I think we will be able to be adaptable. We're resilient, and we have that grit about us that is hungry. And I think you're going to see a lot of innovative solutions that are going to come out of this crisis. There are going to be new jobs. There are going to be new approaches to solving problems that really were on the edge of using technology that we're now going to use. I think return, as Chris said early on in his comments, I think you're going to see critical things like drug manufacturing. I mean, we shipped it all to China and Mexico and other places because we could do it for less money. I think you're going to see those things come back. Those really critical things that we need to keep our country safe, you're going to see them come back. And I do believe this is going to be just like after World War II, when the country really took off in terms of innovation and new jobs and new industries. I think this is going to be the silver lining behind this. I mean, we can never underestimate the incredible loss that we've had in life, and I think disability to particularly our marginalized, underrepresented populations. And so we've got to do a better job of getting help to those groups, particularly in Arizona. You've seen what the Navajo Nation has been through, and we've tried to help as much as we can there. But looking forward, I think we're going to be on high alert, and we're going to be vigilant. When Bill Gates was on TV last night talking about this TED Talk in 2015, warning people, I think everybody thought, yeah, that's some science fiction stuff. You got people's attention now. So I think we're going to be more vigilant, more ready, and it's going to spawn a new wave of innovation, different thinking, different way of doing business, science, health, and you're going to see a rush to biotech, to the healthcare sector. The one thing that we have seen, applications to medical school, nursing school, pharmacy school, public health school have skyrocketed during this recruitment phase. So I'm optimistic we're going to get through this. It's going to be a little bumpy for the next, weeks to months, But by this time next year, I hope we're talking about playing NFL and college football, and things are back to nearly as normal as they were before all this.
All right, Dr. Robert Robbins, Christine Mackay, and Chris Camacho, thank you all so much for joining us here today. Just before we close, I want to mention next week's regional report will be that Mayor's Roundtable. You can sign up for that. That will be Tuesday, April 28th from 10:30 to 11:30 a.m. And as Chris Camacho pointed out, we must outperform here on phase 2 when it comes to the PPP program, and there's so many great resources on the GPEC website, gpeg.org, for those resources.